most people in this business are trying to make money for themselves rather than for their shareholders. And so they're not focused on giving the shareholder the best break. And if you think about it at all deeply, you realize that the stock market creates nothing. It reflects the returns earned by investors, by Investment America, the corporations of the country, the public corporations. And they have earnings, they pay out dividends, they reinvest the earnings in the business. That's where the value is created. You access that value through investing. So then the question is, corporate America's created this kind of value. What comes down to Investment America? And the answer is exactly what they earn, except then the question is, how is it allocated between Wall Street, essentially the financial system, and Main Street, the people who invest? And the allocation to Wall Street is the objective of this business because everybody is in Wall Street. And what we should be doing is working, and what we have been doing here at Vanguard, is putting the investor first and innovating for the investor and not for ourselves, and trying to keep costs as low as we can, which is rock bottom. That's been the idea from the very beginning of it, because a mutual company doesn't have a private owner out there, or a public owner. And so we have no one to serve but the shareholder. I don't think there really is. And the reason is that capitalism is about creating capital for the capitalist, if that's not too many capitals in one sentence. And they know they have to provide value. Adam Smith, 1776. The sole role of the producer is to serve the consumer. And in this business, it's dollars and cents. The more one gets, the less the other gets. In an innovative company, you can create more and more value. You can reduce prices, but you're always making money yourself. That's what capitalism is, the incentive to get rich, if you will. And I'm doing fine, but I don't own Vanguard. I've never owned a share of Vanguard. But I've been paid a nice salary, a decent salary, and nice bonus when I was running the place. So I'm not complaining, but I just don't have and never will have the kind of wealth that most people in this business have gotten, because they charge their investors too much for what they're worth.
Can you really make it very clear what the mutual structure is for Vanguard? Just for somebody who doesn't understand it, is this a not-for-profit? Is it is it a collective? How's it set up?
Yeah, well, first let me contrast it with the typical mutual fund system. And the typical mutual fund system is an entrepreneur of some kind back at the beginning creates a company that forms mutual funds. And that company runs the mutual funds and gets paid for it. And that's the way any company starts. Nothing the matter with that. That is conventional. The difference in the mutual fund industry is when that little baby that needs all that parental care grows up, he doesn't need the care anymore. But some of these funds are 100 years old, almost 100 years old, and they still have that parent watching over them and taking money away. That's too long. The child matures, the child grows up, the child goes off on its own, and Vanguard's contribution is essentially recognizing that and saying, okay, you own the company. The incentives are all gone. You can do that pretty easily.
And again, who is you that owns the company?
You is the shareholders of our mutual funds.
You buy a mutual fund and you are essentially a shareholder, an owner of Vanguard.
Yeah, just to give you each step, here's your fund. It's run by Vanguard, and you own Vanguard. And Vanguard also runs a whole bunch of other funds, and we allocate the cost among those funds. There are now probably 165 of them. So the costs are allocated depending on the fund's own cost, depending on competition, depending on fairness, things like that. So some judgment involved. But we still run this place for, give or take 12 basis points, 12/100%. And the average mutual fund specifically runs straight average, not weighted, about 112. So we save you 1% a year.
90%.
Yeah.
90% plus lower.